In this video, guys, we're going to talk about why you need to be careful about which stocks you might consider buying next. Stay tuned. Hey guys, warm welcome to you. Right, so filming this in the midst of the coronavirus crisis, but pretty valid really whenever you're watching this. And the title of this video is why you got to be careful about which stocks you're looking to perhaps buy next, and whether that's for recovery back to the highs, if you believe that's going to be the case, or whether it's investing for the long term, or even a short-term multi-month bounce. Now, day trading a little bit different because you're purely trading the price action, and it's slightly different in this environment. But you've got to be very careful about the stocks that you're buying. Now, what I mean by this, we've got many stocks that have kind of done this. They've really got hammered, and we're talking serious haircuts, maybe halving, maybe down by 70%, some even more. And then we've got other stocks that have the same pattern, but they're not down as much. And I've done a video which should be up now already. If it's not, it'll be up shortly. I'll talk about the difference in stocks that have been hammered by the market sentiment versus stocks that are hammered because the company is in trouble. And this is kind of some of the things you've got to be careful of. Many people, I think, are making a little bit of a mistake. And again, who knows what the outcome will be? Everyone makes their own trading and investment decisions, and that's absolutely fine, as you should. Never any recommendations. But I think people are making a little bit of a mistake when they look at stocks that have been hit the hardest. Now, why is that? Because stocks that have generally been hit the hardest, especially in this environment now, are probably the most likely to actually go bust. And we've not really been in a situation like this before. We kind of touched on it, I guess, in the GFC, but this is a lot more broader. We've got cruise companies, we've got airlines, we've got hoteliers, we've got travel, we've got all these many companies. I'm not suggesting any of those are going to go bust, but there are companies that could go bust, and many of those could go bust. And these are the ones that have been hit the hardest, especially the cruiseliners, because who wants to go on the cruise at the moment, airlines, because the world's just gone pause. These vulnerable companies that maybe have got big debt already and maybe got big capital requirements, can't borrow again, they're vulnerable to going bust. There's going to be companies out there that have almost got zero chance of going bust. Listen, never say never, but a very slim chance of going bust. We've obviously seen big companies go bust before, but you get the point. So the ones that have been impacted the most or look the most worse on the chart tend to be the magnet for people. They tend to go, that company's down massively. It's down for a reason. And it's not just market sentiment. The ones that are down the most are the ones that may well not make it through. And so you've got to be careful of just picking stuff that you perceive as a bargain, because things have changed instantly. Where we were here, the news flow or the scenario that these companies are trading has changed in a binary manner. It's gone from good to bad in an instant. If you can imagine a cruise company, everything's great, economy's good, people are spending, they've got lots of boomers go on cruises, lots of kind of elderly people go on cruises, and they're kind of having family cruises as well now. It's working well for them. They're making money, blah, 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 you get the point. All of a sudden now, the news flow is such that people are scared of dying from a disease, and so they do not want to go on a cruise. Now, that is a binary event that has all of a sudden hit them. So to buy it and think it should go back to there based on what it was is a dangerous thesis. I'm not saying it's an incorrect thesis, of course. If we get through this, everyone gets comfortable again, we kind of get the health thing out of the way, we could easily push back up to highs in certain stocks without a problem. But to look at it from a perspective of, right, it's down too much, it's going to bounce up, I think is the wrong approach personally, because things have changed dramatically. Some of these companies now are literally going to be fighting for their lives. Some are not going to make it, and so whatever price that may be, it may well be way too much because it's going to trade at zero. Even if it doesn't trade at zero, it may kind of tick along right at lows, desperately trying to get lifelines in the form of loans, in form of cutting assets, selling off bits, fire selling. You know the score now, you know how it works. And so, you've got to be careful which stocks you're buying, because some are now dead. and some are going to be almost dead and are going to be limping along for years. And so just looking at saying how far it's come down is a dangerous approach, because the situation has changed massively and some of these can't survive month to month, you know, with literally no income. So watch out for that. On the plus side, this pattern may well be there purely because of market sentiment, and those are the stocks, and again, in my opinion, no advice as usual, is those are the ones that are probably best to focus on if you're going to look for a recovery. Again, I hope we have a recovery. I hope this blows over, and I hope, you know, the casualties are minimal and all that kind of stuff. And if we go with that thesis for now, whether or not that's going to be the case, if we go back for now, the stocks that are hit by market sentiment and just people pausing spending will rebound the highest when people come back in and carry on spending in the same manner. The patterns are going to be different. Maybe cruise liners and casinos and all this stuff are going to be hit longer term because people's habits will change. And again, that's for you to decide which is the right one and which isn't. And again, we don't know which it's going to be, but just kind of talking it through here. The stocks that are going to do well and bounce back the quickest are going to be the ones where it's literally a bit of a break in their revenue and they're almost back up to where they were. They kind of ramp it back up to where they were, and that's all it is, a blip, if you like, in the revenue graph. And those are the ones that will recover the best because they're going to be, you know, back to earning the same amount of money. The market share maybe will be even more because a lot of the kind of smaller companies will be going bust. You get the point, guys. You get the idea. So be careful about which stocks you're buying. I would recommend not just looking at stuff that's down the most. Now, does it offer a trading opportunity? Of course. These stocks could double before they go bust. And something we talked about before is the stocks that have really, really struggled, how they've often doubled, trebled before finally going. So they're not saying don't buy these. I'm not saying don't trade these, but just be careful that they're down a lot for a reason. And if there's persistent selling in them, and there really are, this event has really just completely wiped them out, and the chance of them coming back or even making you any money could be slim. So just watch out for that and look for the stocks. I believe the better stocks, the better companies, are the ones that, you know, we think are going to weather the storm well and are going to come back and are just literally impacted by the fact that everyone's got to fast sell everything, everyone's got to sell stuff, and it's just market sentiment keeping them pressed down for the moment. And then if we come out of this all being well, better than expected, they're going to pop up much more aggressively. All right, guys, take care, whatever you're doing. I'll see you next one. Bye-bye.